Welcome to the Member xCite presentation. This is a chance for members to increase their profile amongst the businesses here and online. It's not a sales pitch, but a 10-minute insight into your field, a business innovation, or interesting area of your life. The concept is to provide great content that's helpful or interesting to the audience, and members are welcome to apply to present an xCite across any of our events, as well as our Facebook Lives, reaching audiences of over 10,000, building your brand credibility, and exponentially growing your business.
Maria Micallef recently has gone into a new venture, and I've been talking to her about this, and it's actually, I think it's really apt for what's happening right now. And for those of you out there who may be finding themselves wanting to actually generate some additional cash flow, passive income, and so she's going to be talking about how to turn your home into more of an asset that could be doing that for you, generating that additional income. So I think it's going to be really interesting to hear what she's got to say. Maria Micallef has more than 20 years experience in sales and marketing, working for large-scale events, media, travel, corporate rewards and health, and more recently, property. And that's what she's going to be presenting on today. So in recent years, her career has evolved to help people in business or on an individual basis create a successful income stream, even multiple streams, to ensure financial stability now and into the future. Property investment is an area that she believes holds a great deal of power to help people who don't even know how to achieve that passive income.
Well, I thank you for joining me. I really hope you get some valuable information out of today. And thanks to BX for giving me this opportunity to share it with you all. So what I'm going to talk about is how you can leverage your home equity to create cash flow. And it really is extraordinary, isn't it? The times that we are living in, seeing everybody now scrambling to find that very thing, cash flow. And I guess it's just really created some pause within people to assess their situation. And I think a good thing to look at and understand then is the typical cash flow pattern. I mean, this was created by Robert Kiyosaki, and ultimately we would all like to have some level of wealth and financial freedom, right? Well, the wealthy people who get wealthier do it because they look at assets, they create assets for themselves and have those bringing in the income. So as a result, they're getting income from multiple sources. A percentage of that is being used to cover their expenses, but the rest is often being reinvested. And so they continually are building on that wealth or just relying on their assets to provide cash flow that goes beyond just a regular job. Now, that's on the left-hand side. On the right-hand side, I think, is the section that most people fall into, where there's a salary being earned, maybe it's a high-income job, whatever the situation, that salary is being used to create the lifestyle and it's paying for that lifestyle. So you'll find that they've got a lot more liabilities, a lot more expenses with mortgages, car loans, credit cards, and income is coming in but going out, and the whole asset space that you can see there is being bypassed. Now, some people might say, well, I do have a home and that at least is an asset. Well, sadly not. That's not really the case, because your home is your home, and with it you've got fees and costs and maintenance to run it. So an asset by definition creates cash flow and brings money into your pocket. Liabilities take money from your pocket. So the home that has a mortgage and upkeep and maintenance, insurance, etc., that's taking money from your pocket. There's actually no income coming in the home that you live in. Now, if you rent your home, then yes, it can become more of an asset, because then you can be charging something more than your expenses, and all of a sudden you're creating cash flow and bringing money in. Now, even if you've paid your home off, you still are not really having it being used as an asset. It's only if you rent your home out that you're actually bringing income in. But there are other things you can do with your home that you may not be aware of that can create cash flow. So if you think about the situation you're finding yourself in now, this might be worth exploring. So I'm going to ask you to take a piece of paper, all right, and do this exercise with me. For those of you who have a home or even a property, I want you to take a piece of paper and write down how much that home is worth right now. Okay. Yes, I know it's a bit dubious at the moment, but what you can do is research. Even I've done this exercise. Just go online to realestate.com or Domain, and you can get an estimate and just go for the middle price range there. Okay. Underneath it, write down how much you owe. All right. The big scary number. Hopefully it's a small one. Now I want you to subtract what you owe from the value of your property. That is the equity you have in your home. And now we are talking about something that you can use to invest and create some positive cash flow. So I'm just doing this exercise for you. Banks typically will lend you 80% of the value of your home, less the debt you owe on it, okay? Yes, you can go higher and get mortgage insurance, but we just want to try and avoid that. Let's just look at the 80% mark here. So here's an example. Just say, to keep it simple, your property value is $1 million. 80% of it is $800,000, and you've got a mortgage of $500,000. Now, looking at those figures, you have $800,000 in value. Subtract your expense, the mortgage. What you're left is $300,000 in usable equity. Okay, so now we've got that money to play with that you can use in investing. And there's a number of different investments you can choose from. We're going to focus on property. Why property? Well, I'm going to share a number of reasons why, because it's a great way to create cash flow. Others might want capital growth, but if you want to follow people who have a lot of money, if you're looking at what they have and you want it, take the advice of the experts. So Robert Kiyosaki will always say, I'm a cash flow guy. If it doesn't make me money today, forget about it. And again, looking at the situation we find ourselves in, how wonderful would it be right now to have some money coming in addition to that job that you've got, or in addition to the way you're having to reinvent your business right now. Okay, it's always good to have extra income coming in. Now, why investing in a new property is such an attractive proposition is because you can actually get some incredible incentives. All right, you only pay stamp duty on the land, not on the property as well. Okay, it hasn't been constructed yet. You have some terrific tax benefits. So depreciation is a higher tax benefit at this point. It's a new property. In the first 2 years, you get a lot of money back, and it's something that's there for the next 40 years. Something you won't get to the same level with an established property. Being a new property, you pay little to no maintenance, and you have a 6-year builder's warranty. So you know you've got something for 6 years that's covered. You've got additional tax benefits in the way that you structure your loan, and that's something that you can get advice from your financial advisor on. And when it's a new property, we're seeking out places that have high demand, as well as tenants who really are attracted to new properties. There's nothing like being the first tenant of a new home, right? And what's wonderful about the new properties we're looking at, they're fixed price. So that means what you see is what you get. And that's what you're paying for. You know that up front. Now, in this current climate, what you'll also find is that we're actually creating jobs here. Construction is considered an essential service. So investing in new property means that you're actually offering or creating thousands of jobs, and you're also creating really positive cash flow opportunities. Now, new properties are exciting, and a lot of research goes into areas that will achieve great cash flow and even capital growth. Now, usually it's one or the other. I'm going to focus on cash flow because I think that's what we all can benefit from, but also looking at an SDA property. I will explain what that is shortly, but an SDA new property is going to offer greater yields than your regular new property in a house and land package you would find anywhere else around the country. So before I go into SDA, let's talk about the NDIS. Some of you may have heard of this initiative. It's the National Disability Insurance Scheme. Now, this was created to offer services and assistance to people with disabilities. Created in 2016, around 14% of Australians have a disability. That's $4.3 million. And a lot of services are already in place to service them, but now we've got some things really streamlined thanks to this insurance scheme. And it is a bipartisan federal government agreement. So that means it's in place no matter which government is running the country for the next 20 years. With a budget of $22 billion per year, the NDIS is here to service this community. So people aged under 65 will have access to this funding that will provide them a little more dignity and a little more freedom in their current situation. Now, the SDA stands for Specialist Disability Accommodation. Now, this is an NDIS funding stream, and it was created to build new, accessible and affordable housing for 28,000 Australians who have a disability. At the moment, you may be aware, some of them have got some substandard living conditions and others are living in nursing homes. So there's a desperate need to get people living in purpose-built homes, these people with disabilities. An annual budget of $700 million is being supplied for this initiative every year for the next 20 years. And so what that means is that investors will be able to achieve returns of up to 15% over the next 20 years, thanks to this budget and this initiative that's been put into place. Now, there are currently over 6,000 people with disabilities, young people for that matter, living in aged care facilities. It's pretty unpleasant. You may have seen some documentaries about it. And so they're really embracing this initiative, and a number of them have been approved and are ready to move into these purpose-built homes. Others are living with parents or in hospitals in situations that just really are a little substandard and stressful. I mean, imagine being able to put these people into homes to free up the mind space of parents, but also free up the hospitals to take care of people who are sick, rather than people who just have a condition, yeah? So we're providing a bit of dignity here for people who have disabilities. 16,000 of them are on a waiting list to get suitable accommodation. And with the fact that they're under the age of 45 for the better part of it, it means that not only is there a huge demand, they're there for the long haul, okay? These people aren't looking to hop, skip and jump home to home. They're looking for their home that will be their forever home, which is what we like to call it. So it will create greater equality, greater options, suitable spaces for people with disabilities to live with dignity and have a lifestyle that they truly deserve. So why is it good for the investor? Well, I have to say the reason I got involved in this business is because even I can see the appeal of it, and I'm looking to invest in one of these extraordinary properties. They offer all the benefits I've outlined with a new property investment that I've outlined before. What you also get to do is help a community that is in desperate need and a community that is waiting and queuing up to get these homes. There's huge demand for these purpose-built homes. You've also got a guaranteed tenancy. These people are most likely to stay for the long term, and their life expectancy has grown to such an extent that you really are looking at having the same tenants potentially for 20 years. It is a government-backed initiative. What does that mean? It means you don't have the same risk that a standard new property or established property has. With these homes, the government is funding the very income you'll receive from it. Okay, the NDIS has allotted income of $700 million a year, plus we've got some other funding coming through that the investor will receive assisting this group. And it is in place, like I said, for 20 years and expected to roll out for another 20 years because these people with disabilities are not going anywhere. Okay, we have them living in Australia, they need somewhere to live. Now, what's really attractive for the investor is the government is incentivising them to get on board by offering higher rents to participants. So people with disabilities have effectively had their rental income multiplied 3 times, 4 times as much. And all of that is to be used on these new properties. So again, that is what's offering that higher yield of 15%, which equates to $2,000 a week, $100,000 a year. It's an exciting opportunity for people who have equity in their home to also help people in need So you're doing a service to a community in need and at the same time making a yield that just a standard property cannot possibly provide. So here I'm showing you a typical home. It's normally 3 to 4 bedrooms, and it would house 2 to 3 people with a disability plus a carer. Okay, so the carer does live in the same quarters. And with the designs, it's really important to make sure that the facilities are comfortable. Make sure that they're designed with enough space. Make sure that each participant, each person living in the dwelling has their own bathroom. These are the factors to look at, plus, you know, some large space, and make sure that they are compliant. Okay, different home designs are offered to suit tenants' requirements, but they're built to withstand the conditions that they need. From basic care to full spinal support, you've got designs for people that are ranked at different levels. Okay, we've got 4 different types of people with disabilities, and some homes have already been constructed. It's really worth researching the types of homes and making sure that they are fulfilling a need. Okay, typically we focus on robust homes that services 75% of the disability community. Again, creating homes that meet a huge demand of this population. Now, the layouts do provide an opportunity for them to live independently while still being cared for. What I'm going to show you now is a case study that I've shared with a couple of clients. And this home is one that we've actually designed following the advice and just listening intently to what the SILs and carers are looking for. Okay, so when you build a home, it's really important to make sure that you're building something that if it's going to be purpose-built, it has to suit that purpose. With these homes, they've been constructed and designed by our team to ensure that it meets the needs of the people who are looking for a home that services not only their disability requirement, but also just a general need of what they're looking for in terms of, you know, sharing, not sharing. Now, this that you're looking for is a dual living home. Now, dual living is an incredible option at the best of times. So with the NDIS and the SDA, it's got a huge opportunity to make some terrific income. Just going to put my glasses on to read fine print. So you'll see with this property, this is in Queensland, and we're currently building in Queensland. Why? Well, all homes actually in the NDIS, for the better part, are being built in Queensland because you're going to get a better return on your investment, given that the land prices aren't as high as what, say, you would experience in Sydney. So this property is worth $604,000 to construct, house and land, fixed price. When you look at the figures below, you'll see your weekly return is over $2,000 and the gross rental yield is just under 15%. Now, that's with 2 tenants living in this home and a carer. So it's a townhouse configuration, 2-bedroom townhouse on one side, 1-bedroom townhouse on the other, and you've got a resident carer that's there to manage both people overnight, and then an additional carer comes in and services the other person with a disability just during the day. You'll notice they've got their own bathrooms, they've got a garage each, so it really is comfortable, affordable, and a highly desirable location to live in. It's a pretty neat looking home, isn't it? Pretty proud of that design. And that was designed, as I said, by the team in-house, following what we heard people with disabilities need. So how does the investor get paid? Well, there are 3 separate payments that are made. You've got the reasonable rent contribution, which is a percentage of the disability support pension. So 25% of that comes in from the government. And then you've got SDA accommodation payments. Now, this is the figure I was telling you about that is 3 to 4 times the amount of a normal rental cost. So that's where you're getting the extra fees, the extra income. In addition to that, you've got the Commonwealth Rental Assistance fee that comes through as well. So I'll actually show you where these sit because we actually have a calculator that will show you that. Subsidies range from $12,000 to $107,000. The huge discrepancy would be based on the level of disability, as well as your location and the number of people with disabilities you're servicing in any one home. And that means 10 to 18% yield for the investor with these properties. So the SDA calculator has been created to give people an upfront snapshot of what they can expect in terms of cost and return on investment. Ultimately, you will find the building type, the number of participants that are staying there, your design category. It will show you your rent contribution and also the income coming in. So if you look at this example we've got here, this is for the townhouse that we've just shown you, the case study there. So looking at one resident, you've got a home that has the breakout room, it's a duplex, but it's a townhouse for one resident. You're looking at a cost of $45,000 per person. And then when you look at the reasonable rent contribution, you'll see expected annual income just on the lower part of your screen. You'll find that you're going to get $7,000 back, just over. And then you can expect your annual income in total to be $52,000 with some change for that one resident. Now, keeping in mind there are two residences living in these townhouses, you just multiply that by 2 and that's $104,000 you'll be receiving per annum. That's all cash positive. Pretty enticing, isn't it? So where we are different, and what I want you to look for when you want to invest in an SDA property, is I want you to think about the location, the design of the home, and whether it's going to be the type of home that's viable. Can it really be tenanted by people? We've seen some examples where we think the living conditions would not be conducive to having so many people living in this one house. So, you know, it's really good to get some advice on that and be careful when selecting the company you want to align yourself to invest in these properties. Now, where we are different, I'm sure a number of people are NDIS certified. However, we also have the end-to-end solution in the specialist disability accommodation space. And that is something we've been putting together over the last 2 years. So an infrastructure has actually been put in place to look after the investors' needs and make sure every step of the way is managed in-house to ensure we get built to code, and they are built to living standard codes. We make sure that then we get them tenanted, property managed, and your financing can even be taken care of. Now, we've set up a specialist company, the Specialist Disability Accommodation Management Australia, to liaise directly with the carers, with the CILs, to find the right tenants and marry to the right property. And then in turn, we share that information with our investors. So the investor gets to choose the property they wish for, and we can guide them in that process. They're constructed, they're tenanted, and with our experience that spans 70 years in combination, that covers financial planning, mortgage broking, property investment, we've got a range of experience to hold your hand through the entire process, from the home loan right through to ending up with a tenant in your home that's managed over the next 20 years. It's an exciting time to be an investor, and I know when it comes to property, a lot of people can feel nervous, can question how safe is it, will I get the return that's being promised? Well, the figures I've shared with you are purely statistical government figures. I've not embellished. If anything, we like to underpromise so that you can get the lovely surprise at the end. So we've been around for 25 years. The company's been around for 13 years, and we're very excited to be able to be part of this new program that's helping people with disabilities get the lifestyle and dignity they so richly deserve, and at the same time help people develop a cash flow for themselves, investing in these properties. It's a win-win situation for both sides, and a terrific initiative. I think we can be grateful that the government have really done something terrific there to help as many people and as many Australians as possible. So that's it from me. Thank you so much for your time. I hope I didn't talk too long, and I hope you found that really informative and interesting. When this was shared with me many, many months ago, I was astounded by this incredible opportunity and how it can really just help people in need. If you would like more information, my details are there. You can contact me by phone or email, and I'd be happy to share more information about NDIS. You may have some questions. We've got some Q&As we can send out. We've even got some catalogues that can show you just how robust our homes are and how they're structured. That's it from me. Thank you again so much for your time. and hope to see you again on another Facebook Live.